Hello and welcome to Build It Up, the podcast that brings you the insights from people that have made a mark in their industry. From founders and innovators and investors, every week we uncover a new leader's secrets of success. I'm Bill Chen, the managing partner of Cypher Capital. Okay, Kai, it's a pleasure to meet you here. Welcome.
Thanks, Bill. Thanks for having me. It's an honor and a privilege to be able to join the show.
Okay, can you tell us a little bit about how you find the Tokocrypto? I know it's a success story that in the end you sold to Binance. You graduated from Singapore and how you find this niche industry and to build up your first crypto exchange in Indonesia.
Thanks for the question. So I think I first got introduced into crypto back in 2015 through a close friend of mine, Sean G, who was the creator for one of the first actual smart contracts on Ethereum, Digix DAO. And he introduced the whole idea of smart contracts to me, and that's what really drew me in, because through my previous work experience, we dealt a lot with contracts, and the idea of having smart contracts automatically fulfilled by logic that's coded in really drew us in. Fast forward, we decided that we wanted to set up Tokocrypto because we saw the opportunity that Indonesia had. Indonesia is the country with one of the largest population in the world, 270 million people. And in a sense, in itself, is also very decentralized. Did you know that there's actually 17,000 islands in Indonesia itself, which makes the whole governance of Indonesia kind of very decentralized? And it's also one of the largest untapped markets for digital finance. We saw an opportunity to create a secure, user-friendly platform. We started off doing a lot of arbitrage, to be honest, at the start, but soon it kind of transitioned into what Tokocrypto is right now. And yeah, the rest is history.
Okay, so sounds like Indonesia is a very unique market. And I think different market, they have different characteristics. Like Russian users, they tend to use USDT a lot because, they have to use it by parse the Swift. And Korean users are very savvy into the speculation. And how would you characterize the Indonesia market user? And what kind of tailor-made feature you did for the localization?
Again, another very interesting question. So, the Indonesian market is actually very unique. There's a very high smartphone penetration and a very young population that's eager to explore new technologies. As of now, there's about 41% of Indonesians that's aged between 20 to 39 years. So, very young, very tech savvy audience that's ready to engage. Another data that is very interesting is that in a 2020 survey, it revealed that 52.1% of respondents have actually placed bets on a sports event online or gambling or through apps. Furthermore, in 2023, Indonesians lost an estimated $30.7 billion to online gambling. With that, it kind of alludes to the characteristics of Indonesian markets. It's a population that, although gambling is not allowed, haram, because it's a Muslim country, there are actually a high percentage of the population that have actually take high risk and speculative behavior. And this naturally also bodes well for the trading community. So yeah, that's how I would characterize the Indonesian markets.
Okay, so as a cope strategy, what's the most important localization strategy you did for the Tokocrypto to cope with those, local user features?
I think fundamentally it's education. Education, definitely making it in the native Indonesian language is very important. And in a sense, we need to make it as simple I don't know if this is a good thing or not, but as simple and as seamless as a gambling site, right? Not like exactly like gambling, but the onboarding process, the purchase, the transaction, everything should be seamless. Them being able to see their gains, their profits, those things needs to be shown to them so that they are able to kind of, in a sense, relate it to gambling. And yeah, that is what I think it's primarily what sets us, or at least help Tokocrypto become, number one and largest exchange in Indonesia onshore.
Looks like your competitor is not the Indonesia stock exchange. but the other, offline and online casino and gambling marketplace. What do you see yourself, in this niche market? And how do you see, running crypto exchange as a, 2.0 casino version to compete with the traditional online and offline casino?
In a sense, the main difference is we're regulated and licensed. And I think something different from casinos is the concept of crypto or Bitcoin is that eventually, if let's say for Bitcoin, right, it's not a zero-sum game where the house is the one that wins the most. If you look at holders or investors for long term, if they do hold long enough, then yeah, naturally, just like gold, right? The market cap always increases over time, same like how crypto or Bitcoin, or at least the large caps are doing. So yeah, primarily positioning ourselves as a regulated, not say casino 2.0, but I guess regulated platform for people to kind of go in and take slightly higher risks.
That's a good way. So basically, like, you're regulated, but also can enable the users to invest in the high volatile asset globally. Okay, awesome. And tell us a little bit about the M&A to the Binance. Actually, we know each other when I was the global head of Binance, and we discussed a lot about integration, etc. And yeah, I'm not along with Binance anymore, and you also acted as well. I understand it is a very successful story. So I'm just
Yes.
wondering, on a scale 1 to 5, how would you rate this deal in the end?
First and foremost, good times back in Binance. Great times. Honestly, at this kind of point in time, if I look back, I think I rate the deal a solid 5. Yeah, because not because how much money did we get out of it, how much money did we walk out of it, but to me, I think the most valuable thing that I got out of this entire experience, the whole M&A process, or at least the experience of Tokocrypto being a part of Binance, was the lessons, the important lessons that I've learned being a founder, being a kind of sort of like a professional. I'm sure you probably as well, Bill. We learned a lot. And the monetary things, yes, could we have negotiated for more? But I would say, to me, the lessons that I've learned from this experience, money can never buy.
Right. So I guess, if you
And the
got a,
friendships that we made.
yeah, yeah, that's definitely. Actually, that's where we met each other.
Exactly. Yeah. Yeah. Yeah.
Okay. Let's pivot the gears a little bit. Talk about the front running. Front running is a elephant in the room. Basically, that's, one of the most important part, how the exchange, how the market maker and how the founders, make them rich. Especially, when the token launch and the retail, can buy and sell on the spot. Cool venture capital, they have to wait for their 1 year cliff and 3 year vesting. But exchange and the founders and the market maker, they can dump to the market in different way. And to some extent, it's a cat and mouse game. Exchange try to stop the founding team to cash out. Founding team try to sort of avoid the market maker to cash out too much. What do you see of this game? Do you think this is a sort of one of the most important trick for the team, for the founders to make money?
I think it used to be, honestly, it used to be, but I think VCs are getting smarter. Retail investors are getting smarter. You know, they're able to, track the blockchain, to check, what is the, whether the team actually has exited. And I think investors primarily are also able to see, which investors that they should invest in order to avoid this kind of event that's happening. My thoughts is that definitely it's something that shouldn't be done. I personally myself do not dabble in this, but I think there are current tools and mechanisms that investors, exchanges, retail investors are able to ask of the founders to utilize tools that actually lock up team allocations, and they are able to see on the blockchain that these team allocation are not dabbled into. So yeah, that's my response to that question.
Yeah, hopefully, in the end of the day, this front running scheme can be sort of proper regulated, and then, everyone can have a fair game. I think, right now, at least, for the career exchange, they are not allowed to take the advisory token from the founders, right?
Yep.
So in
Yep.
that case, Upbit is only allowed to make money by trading volume instead of
Yep.
like to have a 8% advisory token and the 4% can be sellable during the TGE.
Yeah, yeah, yeah. I personally feel that that is a good regulatory move, and I think it's very welcome in the industry.
Yes, definitely. I mean, like, we cannot imagine Nasdaq to charge 8% sweat equity to Google during the IPO and then sell 4% of the Google stock to the market, right?
Yes,
No
yes, yes,
sense.
yes, yes. I honestly I think that the competition is real. Trump in itself is a crazy example of how meme coins have taken over mindshare of people. I mean, as good as the products that strong founders are building, ultimately what drives price action is mindshare. But I would like to also point out that we gotta take note that eventually over time, I think the liquidity will shift ultimately back from these meme coins to projects with strong fundamentals and utility, such as tech altcoins. And sustainability will always definitely more often than not outweigh short-term hype. The reason why liquidity is sucked into all these meme coins is everyone's trying to make a quick buck out of it, right? But once people start to realize that they cannot do so, I think right now we're still at a state whereby the people that have been burnt by these meme coins have not had a chance to voice out yet. But I think if the pool of these people that have been robbed starts to get bigger and bigger and bigger, people will start to realize that the nature of meme coin ultimately is not something for a long-term solution.
For the voice up, I kind of, have a slightly different view. I think that's a human nature. In the end of the day, when you interview all the guests, all the, visitors outside of the casino, only
Mhm.
the people who win will voice up. And
Yes, that's
the
very
people, who lost money will tend to not get your interview. So I guess, it's going to be a normal trend that like, only the winner who will voice up and show up their, balance, how they make money from the official Trump.
That's right. That's right. Yeah, I think so too. And that is also why, the meme super cycle is so big and so crazy right now, because the people that comes out of this casino are like 1,000x, 10,000x and things like that. But yeah, will there be a next super cycle? I'm not sure. Probably not in the memes, but in something else. Maybe in another form. Maybe back to NFTs, for example.
Yeah. I heard a well said quote like, a good meme token doesn't need a product. And the Bitcoin actually is the most established meme coin. They claim to be a gold and they don't do any development. They just show in the community. And then, Bitcoin community succeeds. So to some extent, you make your money by, doing a real business with launching a token. But also like you are Bitcoin maxi. So to some extent, you are also a meme coin holder.
In a sense, yeah, that's actually a very interesting quote that you have mentioned as well. And I mean, now that you have shared this quote, it does put things in perspective. Should it be the other way around, that now projects with strong fundamentals, strong founders, and utility should actually focus more on seeing how they can make their tokens more like meme coin to capture, putting in the algorithms of meme coin and doing things like that to capture the mind share of people.
I think so. Yeah, even for the microstrategy stock, I always convince my friend don't too short because, mathematically, there are some net asset value premium over there. But actually, the mimetic premium actually can address that bubble. So to some extent, like, people try to short the microstrategy because, they don't deserve the NAV premium. But my argument would be, that is not a NAV premium. Actually, that is the mimetic value provided by the micro seller to the
Mm.
investors on the Wall Street.
This conversation is getting very insightful, and I think whichever founders that are building right now should really bear this in mind. Whatever strong project that they are building, I think in order for the project to sustain and actually be able to, you know, go rise up, they putting a focus on how to capture mindshare, be it through meme or not, must be an ultimatum that everyone considers. Yes.
Yeah. In the end of
That's
the day, I
that's
think
just the nature of things right now, right? Yeah.
yes. Yeah, because we are in a, sort of crypto by nature is a asset class to start
Right.
with, right? It's not like, Web2. Web2 basically you set up the portal, etc. But for Web3, from the very day one, we are in a asset, speculation or, fintech industry by nature.
Yes, yes, yes.
Come back to your new initiative, ForU AI. Can you give the audience a 15-second introduction about what you do for your AI?
Sure. ForU AI, we are an AI network that's powered by your AI generated decentralized identities. I think kind of similar to the meme coin concept, we allow for users to create decentralized identities for their communities, hobbies, or interests, hence mindshare, and allow them to create AI agents to grow their community. We're built on Say, and it combines both blockchain and AI to redefine data ownership and personalization.
So if I am a normie user,
Mhm.
how would you educate me to become a ForU AI?
So, like this, I would say, do you want to be the first person in your community to immortalize your community, your idea, your community, or anything that you have a strong interest with? If you are keen on doing that, then come into For You AI to create your AI DID, because by doing so, you put it on the blockchain and then you're kind of like becoming the creator of that economy and you will forever be credited with that. I think primarily that's the angle that we would do it. Of course, the UI UX has to be simple and seamless enough so that the user doesn't see the backend. And that's all they see. They see it as an opportunity for them to be the first.
Okay. If we compare to some comparables in the Web2 I guess, from the eye attraction, attention attraction perspective, or from fundraising perspective, looks like, the Web2 AI is still dominant the world. From ChatGPT to character AI to scale AI, etc. And also, there are a bunch of AI agency, creation startup over there in Silicon Valley. And basically, sometimes, the money they raise is even larger than the FDV of a crypto AI project. What do you think the difference? I mean, like, by leveraging the crypto, in the end of the day, when we talk about AI to the consumer internet, you compete with each other, right? The developer, some developer, if they develop on Ethereum, and then, they may spend less time develop on the Linux or, iOS. So in the end
Mhm.
of the day, it's a competition, across all the Web2 and Web3. What do you think as a Web3 AI founder as compared to, the Silicon Valley Web2 AI founders?
My honest opinion is that building on Web3 AI actually has elements of Web2 AI inside as well. The Web3 aspect is actually providing a means of recording the inferences and the different processes that the AI actually does on the blockchain. This allows for accountability, and I think primarily the issue that we're trying to address is, in the future, should there be a event where AGI takes over, AI, reaches singularity? I think where we are coming from is that our implementation of Web3 AI is mainly focused on the recording and basically being able to control the AI. It's actually Web3 AI and Web2 AI for us at least is very correlated. So whatever we are building out is kind of where the bridge between Web2 and Web3 is. So I don't think that particularly focusing on Web3 AI, there's like a suck of mindshare out of the Web2 AI component. I think both goes very hand in hand.
Do you think, option to tokenize will give you a huge advantage as compared to, there are some similar product, but who are doing like very normal equity financing, go IPO as expectation?
I would like to quote one example that I saw recently on the news is that OpenAI, one of the examples that you mentioned that has raised a significant amount of money, is also finding it a challenge to develop new models because a lot of computational power is required and they need to spend a lot of money. But one of the options available is potentially tapping into the community or masses to be able to achieve a concept of decentralized training of models through federated learning. That could potentially be one of the solutions to accomplishing kind of like a community driven way of training new models. And ultimately, that is the main thing that differentiates Web3 AI projects versus Web2 AI projects.
Cool. And when do you plan to launch the token? And what kind of fully dilute value you are expecting?
Yeah, we are actually targeting to launch our token by Q1 of 2025. Our FDV is targeted at 60 million. And yeah, this milestone will definitely drive adoption and growth for our platform.
60 million?
60, yes.
That's a very humble expectation, I guess.
My concept, or at least, is start low and then let it build up. As more and more people see the value of it, price should be a reflection of the utility of the tokens and the platform.
Cool. My last question would be, you build up your track record as a founder located in Southeast Asia, and you build your name in a regional market. I heard a lot of, sort of complaining about if you're not a US centric investor or founder, and pretty much like, the upside or the ceiling, the business you can do is limited. For this season, a lot of, narrative is cooked in US market, like Eigen layer, Ecena, and also like A16Z is reshaped the regulation, etc. So what is your advice to the non-US founders and how they can get advantage by locating in their regional market?
Right. I think primarily is to leverage on regional communities, tap into innovation hubs like in Singapore, there's home to a very strong network of startups, tap into regions that have strong regulatory for crypto. Singapore obviously is one of it, which is very strong. I think there are communities like Open Campus, which is also very Asia focused that we could leverage on, that provides mentorship, partnerships, and resources to allow us to scale globally. So I think that's number one. I think the second thing that we have to embrace is, I think localization is very important. We need to embrace local insights. And I think at least Asian market is considered very underexplored. That in itself provides a competitive edge. So I think what we need to do is to see how we can localize our products or whatever we are building to suit the needs of the people within our region, and that ultimately can attract strong global VCs that are looking for growth opportunities outside of the US. And the third thing, I think founders have to have a very compelling narrative, and in a sense they need to memify themselves, just like how I guess meme has done it. Yes, you're building an excellent project, but if people don't know the project, people don't know you and don't know the project and don't know about the problems that you're trying to solve, you're just gonna be washed away by the current. You're not gonna get noticed.
Thank you, Kai, for telling us your remarkable story. We have all learned a lot. Well, that's all we have time today on the Build Up podcast. We will be back next week with another inspiring guest. So don't forget to like, subscribe, and leave your thoughts in the comments. Until next time, this is Bill Chen. Goodbye and take care.